Alright guys, today we're going to be looking at some stock market terms and also some bond terms and how to read a stock table. So first of all, a stock is a share of ownership in a company. A shareholder is an investor who owns some percentage of a company. Trading is buying or selling stocks at the stock market. And the stock exchange is a place where stocks are traded.
Alyssa Garner, if you're in the building, please report to the chorus room. Alyssa Garner, to the chorus room.
All right, now the next thing is probably the most important because there's a question on your next quiz that says, how can you make money in the stock market? There are two ways. One is dividends, which is when the company distributes all or part of its profits to the shareholders. So let's say a company earns $1 million and they decide to give $2 to every shareholder to divide it up. It's extra money that you earn in addition to still owning your stock. It's like a bonus. The second way you can make money in the stock market is called capital gain. Capital gain occurs when you would buy a stock really cheap. Let's say you bought the stock for $1 and then you sold it when it was worth $10. So you would make $9 on the sale. So this occurs when the sale of the stock is greater than the money paid originally. Capital loss is the opposite. So let's say we bought a stock for 50 bucks and all of a sudden it plummeted to $2 and you sold it, you would lose $48. The price to earnings ratio, which is called the PE ratio, is a quotient, which means division, of the closing price per share to the annual earnings per share. We're going to see this in our chart on the back. Now, take your notes and draw a nice little line or squiggle. We just talked a lot about stocks. Bonds are a completely different thing. A bond is basically lending money to a company. You're not getting any ownership in the company. So it's a method that a company uses to raise funds without diluting the ownership. So when you own a bond, when you have a bond, you have no ownership of the company. People who buy bonds are lending money to the company. Now, if a company were to go bankrupt, bondholders are the first to get paid out. Okay, so bonds are safer than the stock market because they're pretty much guaranteed, especially a government bond. And a financial portfolio is a listing of all investments that a person holds. All right, on the back we're going to look at reading a stock table. Pretty much, for most of them, if you can read, you're good. 52-week high, 52-week low, stock name, stock symbol. Now dividends, DIV, it tells you the dividends that are paid per share. So if you are owning 10 shares, you need to take this number and multiply. So you need to multiply by the number of shares that you own, because that's how much you get paid for one share. The yield is your percent yield. It's also known as your annual percent return on the investment. So it's almost like an annual interest rate. Yesterday's closing price divided by the annual earnings is your PE
Good
ratio.
drivers, you may now leave the building. Have a great night. And paras, I hope you had a wonderful para appreciation day.
Now the volume 100s is how many hundreds of stocks were traded yesterday. So you need to take this and multiply by 100. Or you can add 2 zeros at the end. Then you have your high price from yesterday, your low price from yesterday, because it fluctuates throughout the day, the closing price. And then the net change will have either a positive or a negative, and that will be the change in price of the market from 2 days ago to yesterday. Okay. So we have an example of a stock table down here, and they ask us a bunch of questions. Again, most of them you just need to read. What were the high and low prices of the last 52 weeks? The high price, the low price. If you owned 3,000 shares of Coca-Cola last year, what dividend did you receive? So the dividend was 72 cents, but you need to multiply that by how many shares you own, which is 3,000. So you should have earned $2,160 extra. It's like a bonus for owning that stock. You still own the stock and you get extra money. What is the annual return for dividends alone? The annual return is your yield. So that is 1.5%. It's like your interest rate. How does this compare to a bank? It would be lower than the bank offering. So maybe, since the bank has a higher interest rate, maybe you should invest your money in this bank account rather than the stock market. How many shares of Coca-Cola were traded yesterday? That's your volume of 100. So you need to take 72,032 and either multiply it by 100, or you can just add 2 zeros at the end. The reason they do that is so that they don't have such a long number in the table. They try to shorten it to fit on a newspaper. What were the high and low prices from yesterday? You can see that those are right up at the top. $49.94 and $48.33. What was the price at which Coca-Cola shares traded when the stock exchange closed? That would be your closing price, $49.50 per share. And what does the value or symbol mean in the net change column? The net change column has a plus 0.03. So that means that the price increased 3 cents from 2 days ago until yesterday. And last, compute Coca-Cola's annual earnings per share using this formula. So I'll always give you this formula on the quiz right in the question. So it also might be on your formula sheet, I think. So we'll take yesterday's closing price per share, which was $49.50. Divided by the PE ratio, which if we go back up, the PE ratio was 37. And whenever we divide those in our calculator, we'll get $1.34. So you're basically earning $1.34 each year. That's your annual earnings. And then the closure asks, how can you make money in the stock market? There are 2 ways: earning dividends and capital gain. The homework is 8.4 worksheet 1, which is in your packet.